Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets For You. In today's video, we'll be looking at the key economic events and data releases from March 24th to March 28th, 2025. I've already set up my screen to display the economic calendar from the traders room at Markets For You. I've set the dates from March 24th to March 28th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Let's dive into this week's events. Monday starts with UK S&P Wink with tongue sticking out global services and manufacturing PMI Flash data, which could provide early direction for pound traders. Tuesday brings US Richmond Fed Manufacturing Index, CB consumer confidence, and new home sales data, which typically affect dollar pairs. Wednesday features Australian monthly CPI indicator and UK inflation figures, including core inflation rate and headline inflation data. We'll also see US durable goods orders. Thursday includes the final reading of US GDP growth rate for Q4 and the weekly initial jobless claims. Friday concludes with important UK retail sales data, US Core PCE Price Index, which is the Fed's preferred inflation gauge, personal spending, personal income, and Canadian GDP figures. This week's key market-moving events will be UK inflation data on Wednesday and the US Core PCE Price Index on Friday. These releases should create significant opportunities across major pairs. Now, let's go to the technical analysis. This week, we'll focus on the British pound against the US dollar and the Australian dollar against the US dollar, as both instruments face significant data releases in the coming days. Let's start with the British pound against the US dollar. Looking at the daily chart, the pound-dollar pair has consolidated for the past week, with prices moving lower in the last 2 days of last week, now nearing the support level. The pair is currently trading around 1.2912, with UK inflation data ahead on Wednesday that typically shows increased volatility during such periods. We measured an average of 57.11 pips volatility in the 4 hours following past UK inflation releases. Looking at key levels, the pound against the dollar has support at 1.2869 and 1.2785, while resistance can be found at 1.3032 and 1.3108. The price remains above the 20-day moving average, the red line, which continues to act as dynamic support. The stochastic oscillator is moving lower from the overbought area, suggesting potential for continued downside pressure in the short term. Additional volatility could come from Monday's UK PMI data, with historical volatility measuring 42.77 pips, and Friday's UK retail sales figures, typically generating about 45.27 pips of movement in past events. Traders should watch the reaction at the 1.2869 support level closely, as a break below could accelerate the downside movement. Now, let's turn to the Australian dollar against the US dollar. On the daily chart, the Australian dollar is currently trading around 0.6271, in a consolidation pattern after a period of decline. The pair faces an important monthly CPI indicator release on Wednesday, which typically generates about 27.87 pips of volatility in the 4 hours following the release. This inflation data will be closely watched, as it could provide clues about the Reserve Bank of Australia's future monetary policy direction. Looking at important levels, the Australian dollar against the US dollar has support at 0.6201 and 0.6128, while resistance can be found at 0.6332 and 0.6408. The price is currently testing the 20-day moving average, the red line, which is acting as dynamic resistance. The stochastic oscillator is moving lower from overbought territory, suggesting potential for continued downside pressure. The 0.6201 support level will be particularly important to watch during Wednesday's Australian CPI data, as a surprise in the figures could drive significant movement in the Australian dollar. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Wednesday's UK and Australian inflation data releases, as these events can cause sudden spikes in volatility and potential gap risks. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.